I think the U.S. administration sees gold as a means to an end, right? They can't write up Bitcoin and get a bunch of money in the TGA as a magic money machine. They can with gold. And they're still talking about Bitcoin too. The East is looking at this going, listen, we're not going to touch this Bitcoin thing because it doesn't have the history. And so there's sort of, I think we could see those two compete that way. It's very interesting to me that since 2021, gold and Bitcoin are basically the same performance, right? That's a very long time in Bitcoin years for gold and Bitcoin to have basically the same performance. That's different.
Gold and Bitcoin, once viewed as opposites in the sound money debate, now appear to be moving in tandem, signaling a deeper shift in the global monetary order. Luke Gromen, a macroeconomic strategist, sees this convergence not as coincidence but as a reflection of policy and structural forces reshaping the financial system. He argues that the U.S. government's growing interest in integrating Bitcoin into its stablecoin framework hints at a quiet acknowledgment of Bitcoin's strategic potential. In his view, maintaining monetary stability and managing debt burdens in the years ahead may be impossible without a higher Bitcoin price. At the same time, Gromen believes gold remains the more immediate instrument for governments to reprice their balance sheets, given its long-standing credibility and ease of revaluation. The unusual alignment in performance between gold and Bitcoin since 2021 underscores how both assets are responding to the same underlying pressure: the global currency debasement driven by persistent money creation. To him, this rare correlation marks a transition point in the financial system, where traditional and digital stores of value are beginning to play parallel roles. Looking forward, Gromen outlines two potential paths. Bitcoin could continue to rise on gold's momentum as capital flows into hard assets, or it could enter a period of stagnation if macroeconomic conditions turn sharply deflationary. Though he remains cautious, he leans toward the former, seeing Bitcoin as increasingly likely to follow gold higher. By maintaining exposure to both, he positions himself for either outcome, anchored in the belief that each asset serves as protection against the long-term erosion of fiat value in an era of accelerating monetary transformation. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
My base case is it will trickle down into Bitcoin. And I think my base case on that is my confidence in that base case is rising with how we've seen the U.S. government effectively, to me, trying to marshal Bitcoin into helping it with the stablecoin side, right? They're not saying Bitcoin, they're only talking about Bitcoin as a strategic Bitcoin reserve, but I think sort of implied in what they're trying to do with stablecoins, which is essentially just trying to find a large source of repressible balance sheet for the debt. What they're trying to do with stablecoins, to me, I just don't see how it works without a much higher price of Bitcoin. And so I think a lot of it would filter into Bitcoin. I think there's a possible world where, look, what if we do get a hard break and you end up with what is essentially a contest where the East is standing up gold and the West, stands up Bitcoin. That's a possibility to me. Is it a high degree of possibility? Not right now, but I could see something like that happening, possibly. I mean, I'm throwing out a scenario. It's not my base case per se, but I'm personally investing. Like I've got, gold and Bitcoin are my two biggest positions. The U.S. very clearly understands that it is no longer in its interest to maintain the dollar system as it has been structured. That is absolutely the case. And that is bipartisan at this point. Almost bipartisan. What I think there is still some question is around gold versus Bitcoin. I think the U.S. administration sees gold as a means to an end, right? They can't write up Bitcoin and get a bunch of money in the TGA as a magic money machine. They can with gold. And they're still talking about Bitcoin too. The East is looking at this going, listen, we're not going to touch this Bitcoin thing because it doesn't have the history and, the different rails and, there is in theory, a theoretical risk around quantum and things like that to Bitcoin that doesn't really exist with gold sitting in our vault. And so there's sort of, I think we could see those two compete that way. It's very interesting to me that since 2021, gold and Bitcoin are basically the same performance, right? That's a very long time in Bitcoin years for gold and Bitcoin to have basically the same performance. That's different. When relationships change like that, that can often be the sign that something's happening. So I don't have a strong view on that. I have different theoretical ways it could play out that I've thought about, but I don't have a strong view on either one. I hold gold and I hold Bitcoin, and I've been making money on both. So like, that's okay. I don't have to be right if I'm making money on both. Not a strong view, other than just sort of as a patient investor. I have noticed it's sort of, gold goes, then Bitcoin goes, and gold goes, then Bitcoin goes. And so I would be open to that happening again until proven otherwise, basically. I'm also, not to, I'm like the two-handed economist, right? Like, on the other hand, we are getting to that time of a 4-year cycle where historically Bitcoin hasn't done great, right? So in my own mind, it's something I do think about, of like, hey, which of these two are we going to get that have tended to happen? Bitcoin chases gold after a big gold move, or, Bitcoin has a lousy 9 to 12 months at the end of a 4-year cycle. I don't have a strong view either way. I'm open to both. Some of it depends on events, right? If we get some sort of big deflationary aspect, I'd probably shade more towards the latter than the former. But it doesn't look like we're getting that. So I'm still, gun to my head, I think it's more likely that Bitcoin chases gold higher than it is than Bitcoin sort of, falls apart here for, the next 9 to 12 months, like it did in whatever, I guess 2021, kind of peaked in November, December of 2021. And then it was like, 12 months of getting kicked in the nuts every day for 12 months. But it's not like I'm like, oh, I'm so confident it's going to chase gold. I'm not that confident. I hope it's my base case, but it ain't my base case by a lot. So, we'll see.
Luke Gromen views the current financial landscape as a defining moment where the true purpose of gold and Bitcoin is being revealed. His analysis shows that while nominal asset prices, stocks, real estate, and indices continue to rise in dollar terms, their real value declines when measured against hard assets like gold and Bitcoin. This, he argues, underscores the ongoing debasement of fiat currencies as governments rely on monetary expansion to sustain debt-laden systems. Gromen believes these trends validate the enduring relevance of sound money, highlighting gold and Bitcoin as reliable stores of value in an era where policy-driven liquidity fuels asset inflation but erodes purchasing power. At the same time, he remains pragmatic about short-term dynamics, recognizing recurring patterns in which gold tends to lead and Bitcoin follows. Though he acknowledges Bitcoin's cyclical weakness during certain phases, he sees greater long-term upside in hard assets compared to traditional holdings like long-term government bonds, whose returns are constrained during financial repression. Ultimately, Gromen envisions a world where nominal gains mask real losses, with gold and Bitcoin standing out as the assets that best preserve true wealth as fiat-based systems continue to lose credibility. Let's get back to the interview.
This is the big story of our time, I think. The chart shows, S&P, NASDAQ, and home prices in dollars, gold, and Bitcoin. And it's telling you the use case of gold and Bitcoin, right? How often do we hear, what's the use case of gold? Gold isn't used for anything. Bitcoin isn't used for anything. When sovereigns find themselves in a position where they need to have negative real rates to keep their debt nominally money good, this is what happens. They have a printing press. And so they call it whatever they want to call it, right? And we've seen it this time. It's, I can't remember. That was from COVID, right? So obviously we had pretty obvious money creation during COVID. But you can run the same chart. In fact, I have since BTFP, right? The Fed's, whatever, bond bank term funding program, whatever it was buy the effing paper, more colloquially known. But the purists all said, well, BTFP isn't QE. It's not money creation. And the chart looks exactly the same from BTFP, which is to say, you can say, well, maybe there's some lagged effect from COVID, whatever. In the end, I don't care. Right? I don't care. My clients don't care. What is happening here is we have we've gone from the denial stage that there isn't a problem to now somewhere between anger and bargaining, right, of consensus, which is there's a debasement trade. But if you read the paper over like the last week and a half, they've sort of finally acknowledged that there's a debasement trade. So, good on consensus, moving out of denial. But now they're into like somewhere between anger and bargaining, which is like, oh, the debasement trade is stupid. Why are you buying gold? And and bargaining, right? The next stage of grief, which is, well, it's not going to go on forever. And we still have to get through bargaining. We still have to get through depression. We still have to get through the acceptance phases of grief. And I think by the time all is said and done, that chart that you showed, I think, the prices of the S&P and the NASDAQ and homes are going to be a lot higher in dollars. And I think they're going to be a lot lower in gold. And I think it'll be a lot lower in Bitcoin. And so that's where we are. It is what it is. For me, I think the ideal portfolio for most investors is something that approximates the advice that Jacob Fugger gave, who was the richest man in history on a percent of GDP basis. He was a Dutch merchant in the Middle Ages. I could be wrong. I apologize if he's of another nationality. Someone to get offended. But anyway, he recommended 25% gold, 25% cash, 25% real estate, 25% essentially equity. And productive real estate, right? So timberland or farmland or something, and then rebalance over time. And interestingly, Ray Dalio, who's obviously been very successful, that's essentially a model for his all-weather portfolio, or was. And I think that's, as we sit here today, knowing what I know, I think that's probably for most investors pretty wise, right? Like, the 25% in, for me, it's some combination of gold and Bitcoin. Depending on your age, depending on your volatility tolerance. If you're younger, probably more Bitcoin, less gold. If you're older, it's, a little sliver of Bitcoin and mostly gold. Productive real estate, whether it's timberland, farmland, some sort of rental things in attractive areas. Equities, I think there's certain areas of equities that are, for me, I would rather own industrials and certain sort of, commodity assets at this point of the cycle than I would some of the more frothier tech stuff. But that depends on one's personal preference. And then look, with cash still yielding almost 4%, that is both, I think, a volatility buffer and an optionality, right? If we wake up and gold is cut in half or Bitcoin's cut in half, like that gives me the ability to play the long game. I'm going to take some out of that cash. I'm going to buy more, and likewise with equities, et cetera. So I think for most investors, that's the right portfolio. I don't want to own long-term government bonds. I understand maybe there's a trade here. Maybe they might rally if they do yield curve control, but it's such an inefficient way to play yield curve control, right? Of like, oh, well, they set the yield curve control limit at 2 and the 10 years gone from 4 to 2. And I made, you're going to make decent money. Not as much money as you're going to make owning Bitcoin or gold or equities. They're going to go bonkers on the upside. So, when the government needs to financially repress you, like why? It's like Indiana Jones, we'll continue with the metaphor, right? In Last Crusade, right? Where he's running through and there's like, the knives coming through and all the bodies from people that have gotten cut up in past attempts. Like, why? Like, just sit tight and wait for it doesn't need to be that complex.
The unfolding market trends continue to highlight Bitcoin's transformation from a speculative asset into a reflection of the global monetary cycle itself. As governments persist with policies that dilute the value of fiat currencies to sustain debt and economic growth, Bitcoin increasingly functions as a gauge of that hidden debasement. While traditional markets may appear strong in nominal terms, their weakness becomes clear when measured against assets that hold intrinsic or algorithmic scarcity. Bitcoin's behavior, often echoing gold's movements, suggests it is steadily assuming a parallel role as digital sound money, reacting to the same macroeconomic pressures that have historically driven demand for hard assets. Whether it continues to follow gold's lead or evolves into a dominant monetary benchmark of its own, its growing relevance signals a profound shift. The search for trust, value, and preservation of wealth is gradually moving beyond the reach of central banks and into decentralized, finite systems like Bitcoin. As global liquidity cycles and debt pressures continue to shape monetary policy, could Bitcoin eventually emerge as the new global standard for storing value? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support, and we hope you enjoy the video.